Hello and welcome to AI Market News by LM. Let's dive right into the big story. Global markets are absolutely on edge after a historic sell-off just wiped out all of this year's gains in US stocks. In this explainer, we're going to unpack what's going on and why it's happening now. So yeah, the main event here is a massive shakeup in the US markets. This headline really captures the mood perfectly. A wave of what the pros call risk-off sentiment just swept through the markets. Basically, it means investors all got nervous at the same time and started selling anything considered risky, like stocks. And just like that, all the progress we've made this year, gone. And just look at the numbers here. You can really see the scale of the drop. The Dow, the S&P 500, the Nasdaq, everything was down significantly. For the S&P and the Dow, it was the worst single-day performance since last October, a total sea of red. So the big question is, how did we get here? And what should we be watching for next? Well, that's what we're here to break down. We'll start with the big picture, then dig into a wild story out of Japan's bond market, see what geopolitical headwinds are blowing from Davos, check in on China's strategy, and finally look at the key events coming up today. Okay, so Section 1, the big picture. As we've seen, yesterday was an absolutely brutal session for U.S. equities. Now, futures are showing some signs of steadying this morning, but the real question is this calm going to last? To answer that, we have to look at what caused the storm in the first place. Right, on to our second point, the Japan story. It seems one of the biggest catalysts for all this chaos is coming from Japan, specifically from its government bond market. It saw this incredibly volatile sell-off, so volatile, in fact, that one hedge fund manager called it a Six Sigma move. Now, that's basically Wall Street talk for an event that's so rare it should almost never happen. And that's what really spooked the global markets. The move was so dramatic, so out of the ordinary, that Japan's finance minister actually had to get up at the World Economic Forum in Davos and publicly plead with the markets to calm down. That tells you just how serious this was. And this slide really gets to the heart of the issue. You've got this disconnect. On one side, the Japanese government is projecting total confidence, right? They're talking about responsible policies, budget surpluses, low debt. But on the other side, the market is freaking out, worried about things like unfunded tax cuts and whether the Bank of Japan is falling behind the curve. But hold on, there is another theory. Some analysts are saying, hey, this isn't a crisis, it's a normalization. The idea is that after decades of near-zero interest rates, Japan's bond market is finally just returning to normal. Those bond yields are just heading back to a more historically typical level. So maybe it's not a panic, but a long-overdue correction. Now, this has huge implications for currencies, specifically the dollar-yen pair. With the U.S. economy looking strong and the Fed not looking like it's going to cut rates anytime soon, some forecasts are now predicting the yen could weaken all the way to 175 against the dollar in the next 6 to 9 months, a huge potential move. Okay, let's pivot to the second major factor driving this whole risk-off mood, escalating geopolitical tensions. And a lot of this was flaring up at the World Economic Forum in Davos. And the central question on everyone's mind is pretty simple. Is the trade relationship between the US and its European allies about to get a whole lot worse? Because there's a lot to be worried about. You've got threats of new US tariffs on European goods. There are these strange, heightened tensions over Greenland, of all things. And with Europe threatening to hit back with their own tariffs, it's creating what various news commentary has called an incredible environment of concern. That uncertainty is feeding directly into the sell-off. Now, while all this US-EU friction is going on, China has used the platform at Davos to position itself very, very differently. They're stepping up as a champion of free trade and global cooperation. So, what's crucial to understand is China's two-pronged strategy here. On the world stage, they're all about projecting stability. But back home, they are taking concrete steps to fire up their own economy. The number one goal is boosting domestic consumption, and they just announced a massive $72 billion loan facility to help small and medium businesses. So it's stability abroad, stimulus at home. So with all that as the backdrop, what should we be paying attention to for the rest of the day? Let's turn to the economic calendar. Okay, based on information from investing.com, there are two major events to keep on our radar. First is President Trump's speech at Davos that could absolutely move the markets. And second, we've got remarks from the ECB President Christine Lagarde, which will also be watched very closely. All right, so to wrap all this up, what have we learned? It seems the market is grappling with two incredibly powerful forces right now: the unwinding of decades of monetary policy in Japan and this rising geopolitical friction between Western allies. And that really leaves us with a provocative thought, doesn't it? As central banks try to get back to normal and political alliances keep shifting, are we entering a new era where this kind of crazy volatility is no longer the exception, but maybe just the new normal? This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.